Good afternoon and welcome to Biztech's Asian Midday Market Watch, brought to you by ShareInvestor Group, providing stock market data analytics, investor education, and online investor relations. Now, today we have Charu Chanana, market strategist from CNC Markets Singapore, as our guest today. Now, Charu, great to have you on the show.
Thank you. Just a correction from Saxo Markets, please.
Oh, I'm so sorry. Yeah, from Saxo Markets. Before we get your insights, let's take a look and see how crypto markets are performing and also regional stock markets. Bitcoin is at 21,279.5. It's down 0.91%. Ethereum is at 1,612.87. It's up 0.29%. Now, looking at regional stock markets, we've got the Straits Times Index, which is down 0.6%. We've got Bursa Malaysia, which is down 0.61%. Shanghai Bucks, the trend, is up 0.15%. ASX All Ordinaries is down 0.97%. The Nikkei is down 1.2%. The Hang Seng is down 0.61%. And rounding up the numbers, we've got the Kospi, which is down 0.98%. Now, Charu, what's your view on how markets have performed this first half of the day?
So some bit of it, Brian, is certainly a spillover that we are seeing from the Wall Street overnight. I think there is a greater and greater realization in the markets that the Fed will have to continue to be aggressive with its interest rate hikes. And that is taking the bond yields higher now and weighing on the equity markets. With Jackson Hole coming in later in the week, I think that realization will continue to take a leg up as we go through the week. Because it is expected that the Fed will likely push back against easing expectations for next year. So that does mean that there will potentially be more pain to come in the equity markets.
Now, speaking of pain in the equity markets and then also pain in the energy markets, we've got a worsening energy crisis in Europe. Could you shed light on its impact, not only on energy markets, but also then global energy markets?
Yeah, absolutely. I think it's so dreadful to read the kind of headlines that we continue to get from Europe, and especially on the energy front. So we've had this now latest scare from Russia on its gas supplies. The pipeline Nord Stream is going to undergo maintenance again for 3 days from next week. And what that means is that we don't know whether the production will come back up. So right now it's operating at 20% of its capacity. It could go down to 0%. There's also some hope it could go up to 30%. But what I'm trying to say is there will likely be a lot more concern and volatility regarding this. And we are seeing this a lot, in the German year-ahead power prices. They are now at around 700 euros per megawatt hour. That's massive. It's more than 25% up, compared to the seasonal average of the last 5 years. So that's the kind of price the consumers and the industries have to pay. In fact, I was just reading something yesterday which said that the German industries are actually not even signing gas forwards now. The expectation is that either prices will go lower from here, and that's the only way they can continue working, or they will just cease operations. So the impact is really very broad-based. Of course, it hurts consumers' pocket, it hurts industries. Manufacturing will likely slow down. And as you just hinted, there is also a concern that this could spill over globally. Asia is also not going to be spared, given that China, Japan, South Korea are the biggest importers of LNG in the region. There is a possibility that all of these LNG supplies could get diverted to Europe, where the pricing is much better. So we are likely to see a tough winter in Asia as well this year.
Now, Charu, moving from the energy crisis in Europe, as you alluded to, China is one of the countries which is a large importer and has also now hinted that they're going to have issues this winter in terms of energy. But the bigger concern right now across markets is really the Chinese property sector. Now, what are some of those key concerns that worry you now?
You are absolutely right about that, Brian. I think, of course, China has many concerns. It's zero COVID policy, the energy crisis, and now, of course, the property sector. seems to be the bigger of all of these problems. I mean, you can just imagine the scale of the magnitude of this problem by the amount of support that the authorities are coming out with. I mean, we've had the PBOC yesterday announce an asymmetric cut to its loan prime rates, which was clearly aimed at providing some support to the borrowing, the property sector. We also had the authorities announce a 200 billion yuan support to these property builders so that they can complete their unfinished projects. So that kind of just shows that China's authorities are pretty focused on resolving these issues, simply because the representation of the property sector in the overall Chinese GDP is pretty massive. It's more than 20%. So they need to take care of this. But whether or not these measures really have an impact is something we need to watch, because the problem is more on the confidence side, on the sentiment side, and just solving the liquidity issues will not magically help us to solve the sentiment issues. So we have to really see whether we see that demand coming back from the Chinese authorities, and until we see that, I would expect a lot more of these state support policy measures to continue to flow.
Now, Charu, I want to move closer to home now. In the next few minutes, Singapore's inflation numbers are going to be out. What are your expectations, and what is likely the impact for an individual investor moving forward?
Yeah, absolutely. Singapore is a key focus market for us as well. And, of course, inflation probably is already out by now. I'm not looking at it right now, but the consensus was around 7%, which is massive. We're used to seeing 2 to 3% inflation in Singapore. So reaching something like 7% is obviously a big deal. And it, of course, comes, on the backdrop of food and fuel prices. But not just that, I mean, the economy has been reopening. The region has been easing its travel policy, the border measures. And so obviously there is a lot more demand side inflation as well. Despite all of that, I mean, we've, of course, seen growth expectations being slashed as well. So we are in this tough macroeconomic environment. And I mean, I do expect the monetary authority to kind of press ahead with some more tightening later in the year. Because, of course, inflation is biting the consumers. We can feel that in our rentals. We can feel that in our transportation costs. So that's something which will remain top of mind for the Singapore authorities. As an investor, I think a great question there. Despite all these macro headwinds, Singapore does remain a safe haven. So if you're looking for opportunities, from the Singapore market, of course, travel-related stocks and sectors are probably a very good diversifier. Banks are doing well because of the rising interest rates, but also one asset class that really interests me are the REITs. And given that they have a good dividend payout, I think that possibly adds some amount of stability to portfolios.
Now, Charu, as always, thank you very much for taking your time to come on the show.
It was a pleasure, Brian. Thank you for having me.
Now, we've been speaking to Charu Chanana, market strategist from Saxo Markets Singapore, on Biztech's Asian Midday Market Watch. Now, specifically for our audience in Singapore, Invest Fair by ShareInvestor is happening physically at Suntec Convention Centre, Hall 404, this Saturday, August the 27th from 10 a.m. It's free to attend and features a power pack program of 18 investment experts. Sign up today at investfair2022.com. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our syndication partners, TV and radio stations, and websites. Thanks for tuning in.